Everybody, it's Hussein Kabani, your favorite broker, and we have Varan from Fides Mortgages here with us on this podcast.
Perfect. Thanks for having me.
No worries, man. Thanks for joining us. Yeah, it actually has been a while. Yeah. I think if Chris didn't arrange this for us, we might have gone another month or two without it.
Correct.
And there has been a lot of stuff going on with the mortgages. Yeah. Let's get right into it, man. So far, and we're just before the October 29th rate announcement. I don't want to say decrease, but a rate announcement. But we've already had 2 rate decreases already, right? 2 quarter-point drops. And we've also saw this week or last week, we saw the core inflation come up from 1.9 to 2.4. Yeah. So that was a pretty decent jump up.
Yeah.
And from what I read anyways, is that they're still saying the probability of the rate decrease on the 29th went from 77% to 70%. So it still seems like a
high chances indication. I think it's tariff and overall economy as well.
Yeah, right? Exactly. So my question, I guess, to you, first of all, is that we've seen the 2 rate decreases. Has that changed anything that you've seen on your side with people maybe calling in, whether it's for new mortgages or refinances, or how has that changed the activity in your business?
I think it did. It's shifted more towards, I see more shift happen towards the first-time home buyers.
Right.
They are jumping on the market. I think they're taking advantage of what's happening.
Yeah.
I think probably after 2019, I see a big shift of the transition that's happening in the first-time home buyers.
Yes.
Bring the confidence back, and they are taking advantage of what's out there.
Yeah, and you know what? In our business, we saw the same kind of thing. When I looked at our Q3 business, I looked at to say, hey, who did transactions with us and why? And this was the first time that we saw an influx of new first-time
compared to a few years back.
Yeah, and I'm telling people, I think it's a really cool thing because that kind of shows us maybe if not we are going up in our market, but it's starting to show a little bit more layers of stability in the market because we need that first-time home buyer to come in, buy that condo, let that person out of the condo, buy the townhouse or detach, and let that detached person upgrade to maybe a double car detach. So it's helping us move up the real estate market. So it's adding that stability there.
Absolutely. And also the other thing, I don't know, it's your part of the world. I'm hearing a lot of inventory out there and not a good inventory. Mm-hmm. People are forced to sell because of a marital breakdown or financial struggle or the power of sale.
Exactly.
So for the more buyers, they're not really, even though the inventories are high, they don't, what I'm hearing is there's not a good inventory for them to make a transaction.
That's 100% correct because the other component of our Q3 deals was move-up buyers. And in a lot of cases, and it might not seem like the smartest idea to do, in some of the cases, I should say, is that because there's not that much move-up inventory, we actually still had to purchase first. We had to purchase first, and it sounds like a backwards thing to do in this market, but if you want a really nice house, something that you really like you said, there's not that much, so you have to buy that house. And how we did that is that really hedge your bets on what you're going to be able to get, a really low number. There was a house that we sold, and I told my clients it's somewhere between $975,000 and $1 million, but you know what I told them? I said, if you're going to buy this house first, mark all your numbers at $900K.
Yeah, what of extra is gravy.
Exactly, yeah. And the other thing about inventory is that after Thanksgiving Day, I noticed that the inventory did do a bit of a drop off, right? Because when we went in from September into October, at the end of the quarters, what we usually see is a little bit more of a significant drop off in inventory versus at the end of just a normal month. And then I thought we were going to climb right back up to 30. And that's what I even said in my weekly update, but we never did. And even the last 2 weeks I've been monitoring, we still kind of stayed under that 30,000 listing mark. So that also goes to show that, hey, our inventory is not really climbing up to where it was.
That's true.
Yeah. So in terms of seeing first-time home buyers, have you seen kind of any other activity, maybe some of the other rule changes that we saw happen, being able to get a 30-year amortization and also being able to qualify with less than 20% down up to 1.5 million? Have you seen those happen?
Yeah, absolutely. I think we are also running the transaction right now. It's a more buyer.
Yeah.
Buying it with the minimum down payment on close to $1.5 million property. Yeah. Those transactions would have never happened before this rule change. Right?
So it's allowing people to move, and it's allowing our market to move up. But you know what? The other concern that I was having first, and maybe people would have, is that, okay, if you're buying 1.5 million and you're doing a minimum down payment or not the 20%, is that going to lead to a problem in the future?
No, these are strong individuals. They are strong in employment. They're strong in net worth. To the point, one of them can actually carry a mortgage.
One of them don't even need
2 of them, right? So to come to the point, I think they are strong borrowers.
Yeah.
As long as a strong borrower, I know the employment it's a questionable.
Yeah.
But I think these programs are geared more towards right candidates.
Of course, yeah. So at least we're seeing some positive changes. Do you see anything else that's going to happen down the line that might affect people's qualifying?
So there's a lot of talk going on about OSFI's pushing new regulations on investment properties.
Right.
So we don't have a clear criteria how this is going to be planned out. From what I understand is they're going to restrict for the lenders to have more capital. Mm-hmm. So that means the cost of borrowing will go up.
Really?
Yeah.
So how is that again? Like they're going
to ask for the more capital requirement for investors, for the lenders, for the banks to hold on the investment properties. So that means that they need to have more investments set aside to lend if they're going to focus on the portfolio on investment property.
I see. So when it comes to investment properties, they are going to be changing the rules about how they're going to lend. So I guess buying investment property is going to get a little bit tougher.
It's going to get tougher, but we don't have a clear criteria. We are talking to the lenders. They don't know that as well.
Yeah.
There is a talk going on about they may not even use the investment income to qualify.
Wow, that's going to be a game changer.
So let's say you are buying a second investment property. They may, right now we can use a 50 or 80%, depending on the lender, on the first investment property as well on the second investment property.
Yeah.
So there's a lot of unclear. So I don't want to really take this as a feedback. It's like more things up in the air. They may not use it on the next property.
Okay.
So things may get tougher.
One of the things that we touched on a while ago was also, and I'm just looking for a little update if we can, about like the lenders being able to check your line 150 with CRA or like some kind of a verification check. Yeah. Any update or any news on how some of that might go?
So one of my reliable sources has mentioned one of the banks are going to roll this out in January.
Wow, that's actually very soon.
And I don't know, I cannot really comment on it. Nothing's been communicated, but these are very, very reliable sources. Okay. And they're predicting this is going to be rolled out in January.
So we're going to see probably some more verification, legit sources to kind of cut out some of this noise that's been going on.
Absolutely.
Hey, man, this is a perfect segue. I saw you posted something and I didn't quite understand it. Like, so there was, I think, some mortgage agents that were actually charged. It was a big number.
It was a big number.
Like $230K or something like that.
It's a big fine.
Yeah.
And this is one of the few that comes on the media, but we see that on a day-to-day basis.
Really?
This is a real fear for consumers to not to trust the mortgage agents.
So in a nutshell, just because I don't know much about it and maybe people watching this don't know, what actually, like in a nutshell, at a high level, what happened? Why were these people charged?
They arranged the mortgage elsewhere, not in the brokerage. So that means they are fabricating documents to get the financing elsewhere.
Wow.
And those clients don't get qualified.
Wow, that's crazy. So it's basically just falsifying information.
Falsifying information for their financing, yeah.
Wow. And so these guys actually got charged.
I'll give you an example.
Yeah.
I had a client. We had him on an alternate lender. They tried to get the financing in place, went to a mortgage broker. They couldn't get the financing. They told them they're going to get them a financing. This client stopped paying the mortgage payment to the alternate lender. The other individual haven't answered the phone call. Now they blocked him. So since they haven't made the mortgage payment for the last 3 months, the alternate lender is not renewing the mortgage.
Wow.
Now they don't have a mortgage.
So basically they're going...
So these are examples of these leads into things go to fistula.
Wow, okay. So this is another reason why they're going to tighten up. And obviously we're hearing a lot more about delinquencies at the same time. Have you seen that on your end?
Yeah, we are seeing delinquencies mainly on the private space.
So the ones that were already risky, kind of.
And if you really drill down to these things, these clients should have never bought a property to begin with. Like it's also tied up to the previous conversation we had about individuals getting charged, because these clients being promised to get the financing in place in a fraudulent way, and at the 11th hour they've got stuck into the alternate or private lending.
Yeah.
And they've been prepared to get the financing at 4%.
Yeah.
Now they're financing at 8-9%.
Yeah.
So they cannot really keep up the pace.
Yeah, and I think when they get into a jam like that, because like I've heard of stories like where people want to go buy a property, and these guys have sometimes approached me, some of these buyers, and they're like, oh, okay, my mortgage broker is telling me that I'm going to be able to get this financing and whatever, and then later on, what happens is, in like what you said, at the 11th hour, and it's actually at the 11th hour. It's usually on the day of closing, sometimes the day before, but it's on the day of closing that lender is coming back to him, or that mortgage person is coming back to him and saying, I can't actually get you this from one of these top 5 banks, and you're going to have to go into this private source. what I found out sometimes is that that's what their initial plan was anyways. They didn't actually have
That's exactly what I was going to say. They know that since the day one, they spoke to the client.
And then they already had something
them.
kind of lined up. Like, okay, you're going to have to pay 2, 3, 4% lender fee, plus you're going to have to pay this higher fee. And they basically trap them in a way that they have, I don't know, 40, 50, 60, $80,000 in deposit already. And they're like looking at this deposit. I don't want to lose this. I don't want to get sued. So they have to move forward with
You want a live example?
Yeah.
So I had a call from my other friend. Like, trust me, not all the mortgage brokers are bad.
Yeah.
There are so many mortgage brokers, real estate agents, lawyers. We do things to the heart to make sure we do the right thing. So one of my dear friends called me the other day and say, "Varan, you want to listen to this?" I'm like, "Tell me." The client wanted to do a bridge. They couldn't sell the property. One mortgage broker promised them they're going to get everything done through the major bank, knowing they wouldn't get qualified. Never met them, never talked to them. Is always on the emails and the phone calls. 2 days before the closing said, "We cannot have a bridge. We have the mortgage approved, but we don't have a bridge."
Wow.
First of all, if your mortgage is approved, the bridge will be approved.
Yeah.
And by the way, I have an option for you. Go to the lawyer's office. There's some option for you. Went to the lawyer's office. The fees were $65,000.
No way. $65,000 they had to pay in fees.
Yeah. How would you able to manage that in 24 hours?
No, there's no way.
This was planned, articulated well in advance.
And I think that goes back to the importance of what you said earlier is like, you have to know who you're working with. And you know what, if you are in a tricky position where you already know, and most people I think are aware that they are trying to cross a line, do you know what I mean? And then when you do try to cross that line, you have to be aware that there is going to be an issue. That's why I think it's better for you to work with somebody that's reputable and at least they can tell you the truth about what's going on, right?
Absolutely.
And not to make it a blanket statement, but some of these people, like these, whether it's a real estate agent or a mortgage agent or something, we already know the transactions are very low, even compared to the highs of the Toronto Real Estate Board, right? Like, well, we hit over 120,000 transactions at the peak of it. And what are we doing, man? 60? Maybe 60,000.
That's when business got cut in half.
So the business really got cut in half. So those people that were getting even some deals are probably not getting any deals. And imagine the desperation that's going on with them. And it's not just that, but it's like all the stuff that we all have been affected with the inflation and whatnot. They've also got hit with that, but they don't actually have a paycheck, which is making them do these kind of things. So you have to actually be careful. Like, and not to brag or say anything bad is, see, the thing is that I think we're in a position where we have like constant business. We've been in the business for such a long time that we have this revolving business that it is affecting us. Like for me, honestly, it's brought my business down, but it's not to a point where like you're struggling or anything else like that. You're still able to make good decisions for people.
But also come down to the value as well, right? Like we will never put a client into a situation to make the commission. When we know what the outcome is going to be.
Exactly. Because you don't want it to come back to you at the end of the day. These other people that maybe don't have such a reputation or are in the spot, like I think they don't care. It's a survival mode for them.
I'll give an example. We had a client. We got the approval with the alternate lender. That's exactly where we qualified. We've been following up with them for 3 weeks. Ghosted on us. We canceled the deal. 3 days later, he called me and he's begging us to take the deal back to close the deal.
Wow.
He went to a different mortgage agent. They said they're going to get it done through the bank. At the end of the day, he got flagged, he got cut off, and he missed a closing day. He was paying $1,000 to the builder.
Wow.
If you had the right option from the day one, say, this is where I belong, so this is the best option for me, he would have been avoided a lot of stress. Also, he would have saved more money.
It just sounds like to me, if we kind of put everything in, summarize everything, it just seems like the mortgage business is getting tighter. They are starting to
lending landscape is getting tighter.
They're starting to flake things. It is going to affect you in the long term. So
absolutely,
I think you have to be careful. It's not even about this one transaction. I think like once you get flagged, like even down the road when you go to try to do something, you're going to get flagged. Like you already have been flagged. They're going to treat you as a high risk person.
The banks shot a profile, like similar to Equifax. It's called Citadel.
Okay.
Everything is flagged in there.
So if you went to say a TD, and something goes wrong over there, then maybe an RBC or a BMO or whatever.
It's like a credit bureau. Like if your credit bureau can be pulled by every single lender.
Yeah.
Same thing with Citadel. is being access to every single day.
Wow. So it's not like you can kind of get away with
You can't
something
get
like
away.
that. Wow, that's crazy. So I mean, overall, like, you're obviously on the mortgage side. You do hear things and see things. This year, I don't even think that we are going to be able to do the same amount of sales as we did last year. I think at the end of the year, we're probably going to be somewhere around like 11% off of our sales, which will probably equal around like 7,000 less sales, around 7,000 less sales than what we did last year. It's a huge number. So how do you see this kind of moving forward, like in your opinion?
I think, in my opinion, prices will come down.
Yeah.
I think prices are going to be lower than 2025.
Yeah.
That will eventually translate into number of transactions to go up. And it's going to be as the prices to go up and number of transactions to get, the buyer's confidence to come up and the economy to get better. We still don't know. I think I read an article today, Trump is not having any conversation because of the Ontario.
Yeah, because of Doug Ford's ad.
He's stand up for us.
Yeah.
So it's so much uncertainty.
Yeah.
I think we are going to walk into 2026 with the same, or more or less the same situation what we had in 2025. Yeah. But the rates has come down, prices are come down, so the right buyers will make the transaction.
Yeah.
And you need to earn the business.
Yeah. And you know what, like maybe not even so much from a mortgage perspective, but just like in a life perspective, right? Like what I'm looking at, and I'll share this with you, is like I bought my first place when I was 21. And why did I buy that place? Because I saw my parents the way that they were living in like nonprofit housing. And the biggest concern I would say people would generally have is your shelter. Mm-hmm. And my idea of buying this ghetto condo, I will call it, is that
roof on the head.
Roof on the head. And then I was working a warehouse job, and I said, hey, as long as I pay this thing for 25 years, in 25 years, it's going to be mine. I'll be like under 50, and at least I'll have somewhere to stay, and I won't be afraid in this kind of a scenario. You know what I mean? And that's the kind of thing that I'm also trying to talk to maybe some of these first-time home buyers that I'm having interactions with, is basically saying, hey, like, I get it that you want to spend some of your money, enjoy the lifestyle or whatever else like that, and maybe you want to invest in funds and this and that. But at the end of the day, I think what we did was we got carried away with what real estate actually is. We just made it look like a primary investment tool versus a shelter.
Yeah. I think I've seen them.
Yeah.
So I was at an event yesterday. It's mostly consumer proposal, trustees, bankruptcy kind of thing. I had a client who bought a property in Barrie, property in Oshawa, both of them under the water. Mm. And he said, he actually saw my video and reached out to the lawyer who helped him to send it to the trustee. He lost £7, and now he's going through a consumer proposal.
Wow.
So the builder can't sue him.
Wow.
So that's a prime example of using as an investment tool.
Yeah.
Versus using for the shelter.
And you know what? I think it's still okay to look at it as an investment. I still think so. Right now, I would say the investments for me, the way that I look at it, is very minimal. And the thing is that it's very niche products, I think, that you can invest in that might still make sense. And who knows if it makes sense. What I've been telling people is like single door investments to me don't make sense anymore right now. What makes sense is that, and I'll throw it out there, like I think that there are some good deals even in the condo market right now. I think that there are, but it's not across the board. You have to be able to see what those deals are and just be able to look at it in the future. And you know what? Even if you don't get so much growth in it, and I'm not trying to convince anyone to buy, but if you don't get so much growth in it, at the end of the day, you have to say, I have to live somewhere.
100%.
What happens, I tell people this, what happens when your ability to earn money stops? Like, what is that going to be, 60, 65, 70? What happens at that point when your ability to earn and pay rent stops? Where do you go?
Best investment is owning a house than renting it.
Yeah. Yeah, and that's some of the things I was telling to somebody else. Like Ima has a friend that is basically like, yo, I have some down payment money, but I don't want to pay the servicing costs every month of it. I don't need to live there. I'm cool staying with my parents. So the idea I'm like is like, buy the place and put the money into it, rent it out. Okay, I'm going to be negative cash flow on it, $400 a month. But I said, then go look at the amortization table, and you're actually banking more than $400 a month in principal.
Over years.
Like even then, like you pay $400 a month, your principal actually savings is like $500 a month going into the thing, right? So you're actually going to have a place to live, and it's paying it down.
100%.
Yeah.
100%.
Thank you so much, Varan, for having or coming over on the podcast. Yeah, and if you guys have any questions related to your mortgage, I encourage you guys to reach out to Varan. We'll get his contact information somewhere on the screen or on our.
Chris will figure it out.
Yeah. All right, guys. Until next time, guys. Remember one thing: get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it. sell it, sell it, sell it, sold.